Why are gold and silver not outperforming this time, even during the Israel-Iran conflict? This is the question we have been answering to, and here is how. Traditionally, precious metals perform strongly during periods of uncertainty, but the current situation appears different. Based on our observations and study, there are several possible reasons behind this. Many investors are currently sitting on significant profits in gold and silver, thanks to the strong rally in 2025. At the same time, a large number of investors are facing losses in equities and cryptocurrencies, particularly those who invested using leverage. In such situations, investors often sell profitable assets to cover losses elsewhere. As a result, profit booking in precious metals may be limiting their upside, despite geopolitical tensions. Another factor we have observed is the strengthening of the US dollar. Historically, when the dollar strengthens, precious metals such as gold tend to either correct or move sideways. When the conflict initially escalated, gold saw a sharp spike of nearly $400 per ounce. However, as the US dollar began strengthening, precious metals started correcting. A stronger dollar also increases the opportunity cost of holding non-yielding assets like gold. A third possible reason is the shift of capital toward energy markets. The conflict in the Middle East has pushed crude oil prices higher, with prices rising from around $70 to nearly $88 per barrel. For traders and institutions involved in hedging, crude oil currently presents a more direct opportunity linked to the war situation. As a result, some funds may have shifted from precious metals into energy markets. Higher oil prices also create concerns about renewed inflation pressures across the global economy, as rising energy costs increase transportation and production expenses. If inflation persists, central banks such as the Federal Reserve may be forced to maintain restrictive or neutral monetary policies for longer than markets expect. Higher interest rates and elevated treasury yields tend to support the US dollar and increase the opportunity cost of holding non-yielding assets like gold. Beyond the immediate crisis, many believe that gold's long-term outlook is tied to deeper structural shifts in the global economy. Trends such as deglobalization, geopolitical fragmentation, and the increasing weaponization of economic policy are forcing countries to reconsider their financial alliances and reserve strategies. Finally, those who look at gold purely as an investment for returns may not fully understand its true role. In our view, gold is not simply another investment asset. Gold is the only currency that has survived every monetary system in history.